Give it up for Danielle DiMartino.
Danielle DiMartino.
Danielle DiMartino booth.
Hi everyone, Daniela Cambone here. Before we get to our interview today, just wanted to wish you a very great start to your 2025. May it be prosperous and above all else healthy. I also want to invite you to reach out to one of my incredible colleagues at ITM Trading. It's a perfect time for you to either reconnect with us or connect with us for your first time. Let us help you build a strategy centered around owning precious metals. Call us today or book your Calendly appointment. There's a link below in the description. Pick the day and time that works best for you. We'll talk soon. When it comes to the US debt, can we really sit on our laurels forever? Joining me to talk about this and so much more, Danielle DiMartino Booth, CEO of QI Research. Danielle, Happy New Year. Always good to be with you.
Likewise. Thank you for having me. Happy New Year.
Yeah. Well, this is part of our Outlook series, so we really want to get your sense of direction here of where we're headed. So much talk surrounding the debt spiraling out of control here. And the question is, will it become a topic that will be at the forefront for the new Trump administration or not? What are your feelings here?
Well, from everything that I've heard and seen from the incoming head of the Senate, John Thune, and from Mike Johnson, the Speaker of the House of Representatives, it seems like the very first order of action is going to be extending those 2017 tax cuts. We know that would probably be additive of about $500 billion for the deficit kind of immediately. And then I want to say $5 trillion over the next decade or so. I think the biggest question on investors' minds right now is, let's assume that we do get these tax cuts extended. What comes next, and how are we going to pay for them?
Exactly. So the question is, how much longer can we let this ride out for? What is your sense? I mean, is it a question of years, of decades?
Well, I'm in the skeptical camp, and I don't think that things can go on forever. And so I do look and I hope for some rationale going forward and a little bit more fiscal discipline. Of course, I've been hoping for that forever. The operating assumption with any party inside the Beltway in Washington, D.C. is that we can just continue to add to the debt indefinitely and rest on the U.S.'s position of having the reserve currency status of the dollar.
And obviously, Danielle, we're speaking ahead of the first interest rate decision of 2025, which will come on January 29th. The expectation of fixed income markets is that rates will be held steady at the meeting. I know you've been doing a lot of pounding on the table, talking about how the Fed is just so disconnected right now from the reality of the U.S. economy. If we're looking at restaurant chain bankruptcies, housing down, we're supposed to be in this YOLO mode if you look at what the Fed is saying, but there's such a disconnect here, Danielle.
There really is. And, I'd like to invite members of the Federal Open Market Committee to hop on LinkedIn and to read about the plight of so many so many of those who are out of work and not able to get a fresh occupation, not able to land a new gig. We have record numbers of Uber drivers, and the gig economy is my concern, is becoming very saturated because so many people have done the logical math and said, gee, if I can only make this much money applying for unemployment benefits, then I may as well become a DoorDash driver or a Lyft driver instead, because it's just simple math. One's going to help me pay the rent. The other is not going to be sufficient. At the same time, we've seen, as you mentioned, bankruptcies go just completely haywire. There was a new report out that was covered by the Financial Times that showed that we had the highest number in 14 years of bankruptcies. And more importantly, double that number in 2024 of what we call a distressed debt exchange, which is an effective bankruptcy my concern right now is that this disconnect between Fed policy and what the average working man and woman is experiencing is very wide, and that they're not in tune to the needs of the U.S. economy when that is their main job.
Yeah, that's actually quite terrifying. I mean, are you optimistic things will change and that disconnect will become, smaller and smaller?
Well, you do hear, we're in a period right now where base effects are going to be very very powerful in holding up the consumer price index to a
Yeah.
higher level than it would be otherwise. And again, here's another dichotomy, and that is that we're hearing from so many companies that that they're struggling to increase prices in this environment. So my concern right now is that the math of base effects is going to push the Fed to pause in its rate easing campaign at a time when a lot of U.S. households need relief.
And, Danielle, I have a lot of newly married couples watching the show, and they asked me to ask you, should we be buying our first home this year in 2025, Danielle?
Well, it really depends on where they're looking. Right now, the Midwest is one of the hot spots, namely because you can find a more affordable entry level home. We are seeing areas where hurricanes Beryl and Milton and Helene kind of scorched a path through the southeastern United States and on up into North Carolina. We are seeing rising mortgage delinquencies in those areas. So the advice that I give is to really be attentive to opportunities to get into either a foreclosed home or a distressed seller situation. Look for those opportunities, because I think a lot of people who did buy homes in 2021 and 2022 have this kind of cognitive dissonance, that they have this kind of regret of having bought it at peak home prices. And, now they're having to contend with the carrying costs of these homes, not just the mortgage payment and the interest, but the property taxes and the homeowner's insurance,
Right.
and just the cost of an upkeep of a home if the air conditioner or the furnace goes.
Bigger picture, like I said, this is part of our Outlook series, and there definitely was a sense right after election, a sense of optimism that the market's going to be great, that things are going to be different in 2025. Give us a reality check of what we can expect this year. Is that optimism merited?
Well, it will be merited if we see the private sector begin to hire again. And I think that this is really at the crux of the challenge of trying to ride the bridge between hope and reality, because hope is not a strategy. And the private sector, we got fresh data out, and if I read hiring freeze one more time, my eyes are going to freeze over. And that is, you've got to get companies out of their cost cutting mindset. You've got artificial intelligence replacing employees right and left, and people with good experience, good educations, not able to get new jobs that pay them enough. So again, I think the onus is going to be on the private sector, and indeed for a lot of the promises of deregulation and potentially lower taxes, helping to spur investment in labor. Again, on the part of the private economy, because that's really what's been missing these last few years when we've seen an extraordinary amount of government hiring.
Is President-elect Trump getting handed a bag of rocks when it comes to the economy from President Biden?
I think that there is, I think that the momentum, the downward trajectory of the revisions to payrolls suggests that Bloomberg Economics has done some good work on this as well, suggests that job losses probably started in the spring of 2024, and it's been on a bumpy path ever since then. But again, I go back to the highest number of bankruptcies in 14 years. You don't just report on bankruptcies as if you're in a vacuum. These are not events that occur in isolation. They tend to be accompanied by restructurings, tend to be accompanied by layoffs. And you have to take all of this into account when you're looking at where the economy is headed going forward in a period of stubbornly high interest rates that are very hard for a lot of companies to carry.
Absolutely. And let's talk about the money supply. If you look at the contracting of the money supply, which really started in summer of 2022, this has only happened, 4 other times at this rate since the Fed was founded. All signs are really pointing to an economic slowdown, right, Danielle?
They are, and I think that we're getting kind of buried in this kind of enthusiasm and optimism. And again, I want to see a manifestation of this, because as they say, actions speak much louder than words. I need to start hearing from companies that we're no longer in a hiring freeze period, that we're looking to grow our payrolls, that we're looking to invest in the future, in the next generation, whatever that may be. I look forward to incoming Treasury Secretary Scott Bessent using a carrot and not a stick, encouraging U.S. companies to set up new plants, new manufacturing operations in the United States, and give them time to do so, rather than just a repeat of trade war 1.0 with China, when a lot of American companies said, you know what, we'll just move our operations to Vietnam or another country in Southeastern Asia. I'd rather see those jobs come back home.
Yeah, actually, from an economist standpoint, Danielle, what's your take on tariffs? Are you pro or anti-tariffs? Are they a good thing or not?
I think that I think that the realization that we don't produce enough here in the United States makes targeted tariffs potentially good economic policy. I think blanket tariffs end up backfiring, especially when you're talking about our economic allies of Canada and Mexico, where we have been encouraged as an economy to friendshore or to near shore. So you don't want those the actions that American companies have taken to effectively be punished with tariffs on our closest economic allies.
Last point, Danielle. If I had to ask you one thing you're really watching for in 2025 that's on your radar, what would it be?
So you hear and read a lot about this phenomena of double defaults. So whether you're talking about commercial real estate or whether you're talking about the corporate bond market, you're seeing a greater proliferation of double defaults. When I read that, I see that the opportunity to extend and pretend is exhausting itself. So I will be following very closely the developments in the U.S. banking system. We've had a reprieve of sorts, and banks have been able to buy themselves time. And I think that when you start to see a given property not default once but twice, that the regulators are going to have to say, and the credit rating agencies, for that matter, are going to have to say, we need to start recognizing these losses, cleaning up these bank balance sheets, and what the implications could be when you're seeing commercial and industrial lending really hit it's basically flat year over year. We're seeing a lot of lending into the shadows, a lot of lending into private credit. How is this going to play out? So I'm really paying attention to the banking system in 2025.
Because we could potentially have more failures, is your concern?
That is certainly that is certainly the potential, because again, we've bought time, but you can only buy time for so long. I would put the onus back on the FDIC to be creative and proactive in trying to engineer mergers and acquisitions in that area, rather than necessarily to see a raft of bank failures.
Just want to get a question in about gold. I know you are a frequent speaker at various gold conferences, including Rick Rules, which we both attend. A lot of our viewers, obviously, gold bugs. Danielle, your thoughts on how you think gold will perform this year?
I think that gold is going to retain the position that it's assumed for the past few years of being the ultimate safe haven, especially when there is concern, especially among holders of gold, that there is not a requisite level of fiscal discipline in the United States. So in the sense that you're worried about debt and deficits, then a safer haven than U.S. Treasuries will, of course, be your precious metals complex.
Danielle DiMartino Booth, you do fantastic research. I invite everyone to check out QI Research, and we will see you soon, Danielle. Thank you for your insights. And thank you all for watching. We'll have more great content. Stay tuned to the Daniela Cambone Show here on ITM Trading. And don't forget to sign up at DanielaCambone.com and subscribe to our YouTube channel. We'll see you soon.